Welcome back to the channel, guys. I'm your host, Buckning, and today I'll give you an update on the end of the week portfolio. We are gonna go through a few things and just show you that everything's gonna be okay. I know you're probably feeling the pain right now. Are you feeling the pain right now? Because the market just seems like it just keeps dropping and dropping and dropping, and it's the topic of 2022 currently. We will get right into it here, guys. But if you're new to the channel, welcome. This is where we put $100 a week into a tax-free savings account to build a dividend portfolio right in front of your eyes. And if you're not new, welcome back. And so for the day here, portfolio actually closed out below 10,000 because we did hit that 10,000 mark, but now we're below that mark again. Closed out at $9,875.15. We are down a whopping $182.20, down 1.82% for the 1 week. We are down $521.97, down 5.02%. For the 1 month, we are down $147.03, down 1.47%. And for the 3 months, we're up $616.57, up 6.66%. For the 1 year, we are up $1,530.86, up 18.35%. And for the all, we are up $1,822.46, up 22.63%. The positions we purchased yesterday, which was Friday, because I'm recording on Saturday, which is not very often, but we did purchase 1 share of Bank of Nova Scotia, ticker symbol BNS. So activity here, we bought a fractional share of $25 of VFV. We got 0.2537 of a share, and Bank of Nova Scotia market buy at $90.33. So we will go ahead and update the dividend tracker. So we'll head to trackyourdividends.com. And last week we closed out the portfolio out at $9,667. We were up $1,998. Dividend yield last week was 3.36%. Not last week, but what it closed out on Friday, which was yesterday. End of day, our yield on cost is 4.23%. Annual income of $324, which is fantastic. As you can see here, Bank of Nova Scotia, last week we had 7 shares, but now we will have 8, so we will update that. Our annual income for Bank of Nova Scotia was $28. Our yield on cost is 7.33%. Dividend yield today is 4.45%, so we are doing really well in that position. Currently have a profit of $247.73. Average cost of getting in is $54.58. That will obviously change because we are purchasing a stock at a way higher price than what we had originally purchased at, which is fine. So ticker symbol for Bank of Nova Scotia is BNS.TO, not comma.TO. And there it is. We bought 1 share of that, and we purchased at $90.33. And we'll go ahead and add that holding. And things change a little bit here. So Bank of Nova Scotia, now we have 8 shares of that, and our annual income went up from 28 to 32. Yield on cost is 6.77%, and our average cost is $59.05. The next share that we purchased was VFV. We had 0.48 of a share. It closed out today at $98.26, and it gives us an annual income of 54 cents, but we'll go ahead and add a new holding there as well. So this is the S&P 500 index ETF. We didn't buy 1 share. We bought 0.2537 of a share, and we bought it at a price of $98.54 as a fractional share. We'll go ahead and add that holding, and things change again. So as you can see here, our annual income is up to $329. VFV, now we have 0.73 of a share, almost 3/4 of a share. We now get 83 cents per year from that. And yeah, that is the dividend tracker. So currently our annual income is $329 for the year. And we'll just keep on going. As you can see here, we broke the $40 mark in dividends here, which will come up soon. So that's fantastic. Our goal is to maybe get $100 at some point here. $100 a month would be fantastic. So that is trackyourdividends.com. We'll go ahead and head to ShareSite. As it stands, we are hitting a interesting time in the market, which is maybe scary for some people and maybe opportunities for other people, other investors. But I don't want people to panic, because I know people are probably starting to feel the pain. Day after day, we are seeing a a decrease in the value of our portfolio, the decrease in value in the S&P 500, and people are panicking. I mean, there are people being maybe irrational when it comes to the fear that's going on with inflation, with the cost of goods going up, with the prices of things going down, and it's just it's a war zone out there right now, and I get it. There are going to be people that are going to say, "Oh, buy the dip, buy the dip. Oh, we live by buying the dip and the decrease." And I don't think people follow through with that. It's the most simplest thing that you can do. And the thing is, if you're truly following through with that, this shouldn't be scaring you. It shouldn't be freaking you out. You should continue, as always, continue to make purchases in your investments, to continue to keep on contributing to your investments, especially your tax-free savings account and anything else. Here is the time and now where everything seems to be going in chaos, where you can start buckling down, doubling down on finding more sources of income to contribute to these downturns. And I'm not saying this is a downturn. I'm just saying that maybe it's the time to invest a bit more into it, because you're getting these at better prices than they were a few months ago, when they were at all-time highs all the time. And if you truly live by buying the dip, as a lot of people quote unquote do, then I don't think people should be panicking or anything like that. And they should really walk the walk instead of just talking the talk, in my opinion. Because as you can see from me, every single week, we are still continuing to make our regular purchases, doing our fractional share on VFV, which I committed to at the beginning of the year, regardless of the price. I will continue to do that. I ain't scared of the market. I'm going to be working more to make sure I have more capital to invest, because riches are made in recessions. That is a true thing. And honestly, like, if you look at the S&P 500 today, it was down 1.89% for the day. For the 5 days, we were in the week, it shedded 5% in value. And this is what people are freaking out about. 1 month we are down 6%. 6 months though, we're still up 0.7%. Like, what's everyone freaking out about? Year to date, yes, we are down 8.31%. But for the 1 year here, we're still up 14.49%. 5 years, look at this. This little blip right here is what everyone's freaking out about. You go to max, this little dot, I can't even zoom into that, is what everyone's freaking out about. I don't get it. Okay. And so if you're truly living by the things that you hear, these Instagram quotes or TikTok quotes, or your little influencer on TikTok, or just a guy on YouTube, if you truly are buying the dip, then there's no need to freak out about the market. There's no need to worry about those things. All you have to do is double down on finding more sources of income. Get off your butt. Probably stop watching this video. Go find a side hustle, or whatever you need to find. I hate that word, side hustle. Go find an extra piece of income to bring in some extra cash flow, to start investing, to secure yourself for the wild ride that's going to happen 2022, because it's going to be wild. This is I think it's absolutely wild. I think it's absolutely fun. I'm pumped that these prices are down. As you can see with me updating you guys every single week on my purchases. I'm not giving up. I'm not going to let the market scare me. I never have. I probably never won't. And I'll keep my money invested. I'm not going to sell things off. I'm going to continue to do what I do. And yes, the market can scare you sometimes. I'm not going to lie. I get scared sometimes, but I still do what I need to do, because I just go back to the basic principles of investing, the basics of continuing to invest for my future, for the next 5 to 10, 20 years, right into retirement, right into my deathbed, and so on and so forth. So that's my little update for the week. That's my little spiel for the end of the week. Have a great weekend, guys, and leave a like, and don't forget to subscribe, and we'll see you in the next one. Bye.